Hello. This is a trade recap for last week. Uh, I'm going to use DXY and maybe later we touch on gold. That's the most traded asset. Okay, we all know that when DXY is bearish, the XXUSD or the pair that has USD as the quote currency goes bullish, right? And the pair that has USD as the base currency goes bearish. Now with this information, let's go to charts, the DXY chart, all right? So this is DXY on weekly, okay? So this is DXY on weekly. Without wasting time, let's just look at how it's going to be, how it went on last week, and maybe predict what might happen next week, right? So when I look at the charts like this, of course, this is a top-down analysis again. Okay, so when I look at the chart like this, I just want to focus on the recent price actions. So I'll focus just on this part only. Okay, I focus on the most recent printed price actions. So in this case, we can see that uh, we can see that looking at this point to that point, okay, you can see that weekly was bullish. Okay, it's been bullish for a while right there. That is the only area that we are going to focus on. Okay, so we've been bullish, and it's kind of a bearish flag, but until it breaks in either direction, it will remain bullish. Okay, so when I come to the chart like this, after seeing that, I'm a nicety trader, right? So I mark the most obvious BDRAs that I see, be it an order block or the swing highs, and or be it the price imbalances, the fair value gaps, and anything of that sort. Okay, so what I can see right here, the most obvious thing that I can see, okay, is this recent high right there, and these recent highs, those are equalized right there, and okay, and okay, let me remove this just to and this fair value gap that the price bounced off. You can see this fair value gap was touched once, twice, the third time touched just the tip of it, and the fourth time. Okay, and we've been bullish. We've been very bullish. You can see we've been very bullish. Having that on weekly, what do we have, or what do we have on the daily chart? So let's go to the daily chart. Let's see what the daily chart has for us. Okay, for the daily chart, this is what we have. Okay, so let me just zoom. For the daily chart, let me remove this again. For the daily chart, we see that for the daily chart, let me just okay. For the daily chart, I don't want to touch on this equalize, of which last week I was really positive that the price was going to raid the liquidity uh, resting at this equalize, this one and this one, but unfortunately it didn't happen like that. Okay, so let's break it down. We were bearish the rest of last week from Monday. That was Monday, Tuesday, Wednesday, Thursday, and Friday. So looking at this point, uh, the only resistance we see, okay, we have no resistance right here. The only point we see the price might be heading to is this low and this low right there. Okay, that is the only place or the only point we see the price might be headed to, because in between here we have no order block, we have no fair value gap. The only fair value gap that we see has been traded into that fair value gap right there. Let me just shade it. Okay, so that fair value gap has been traded into, so there are lower chances of this fair value gap holding the price. So what do? We expect the price to go for external range liquidity now that we have nothing that will resist price in between here. Okay, so we are expecting the price to maybe go for this sell side liquidity. Okay, this sell side liquidity or this sell side liquidity. So the two things might happen, but we are still bearish until the price reaches this zone. Okay, this sell side liquidity resting below. That is on daily. And on daily again, we can mark there is a fair value gap there. Okay, I'm an ICT trader, so you will find me touching mostly on these institutional reference points, the order blocks, the fair value gaps, and things of that sort. So I hope it's not monotonous. Okay, it's not getting boring. Okay, so on the daily, that is what we have. We are bearish, but we are bearish until where? Okay, that is the point. Let's go to the 4-hour chart. Let's see what the 4-hour has in detail. Okay, the lower the time frame we go, the more the details we get. All right, so this is the 4-hour chart, and we have to focus on the most recent price actions, the recently printed. Okay, so I'll remove that and I'll remove this, but I'll keep the swing highs and swing lows untouched. So on the 4-hour time frame, we see that we had this bearish flag right there, right? That is a bearish flag. That is a very good bearish flag right there. Okay, even though last week I was expecting the price to touch on these equal highs right there. That was my target last week. So I was targeting that as long as DXY is bullish, I was expecting the pairs with USD as the quote currency to go bearish. Okay, but we can see that the price didn't go to these highs. We saw that the price came down and changed the character right there. That was a change of character. Okay, so that was a market structure shift. We were bullish, and then immediately when we saw the market structure shift, that was an indication that the price has changed the direction. Okay, and to add on our confluence, we saw that there was a failure swing right there. So that was a failure swing. So that was a failure swing. Okay, so this failure swing dropped down and changed the character, the market structure shift with a fair value gap right there, right there. So at this point, you would automatically and obviously and clearly uh, have the bearish argument in mind. Okay, now that we were bearish, where was the price going to? If you consider this, if you consider the history, and when I say the history is the previous price actions, we just see these lows that was traded and displaced. These lows was traded, displaced. If you see these, we can see that the only thing we see, we have no gaps. Okay, this gap has been traded into. So if for the institutional reference points, if a gap has been traded into, don't expect the same gap to hold the price. Okay, so for me, this gap has no significance. It has no importance. Okay, because it has already done its part. So I would not focus on that. I will not focus on this because it has been traded into. I'll focus now on the external range liquidity that is resting below this low right there. Okay, this low, that low, and this low right here. So that is my focus. Okay, that is my focus on DXY. So I will remain bearish on DXY, or DXY will remain bearish until it finds support at either this point or this point. Okay, so as long as this DXY is bearish, we go bullish on pairs like GBP USD or Euro USD, Audi USD, so long as the USD is the core currency. And as long as we are bearish on DXY, we go bearish on pairs that has USD as the base currency. Okay, the likes of USD JBY, okay, USD CHF. Okay, so that is on DXY. So we are targeting these lows comes next week. Okay, so the price might tap into this zone. So things like this might happen. Okay, so we might go bearish until the price taps here, grab the liquidity and go higher. Okay, and go higher like that. Or we can again expect the price to come here, tap this zone and go higher. Okay, or it can tap these zones again. Okay, can tap this zone and displace downwards. Can tap this zone, displace, and then pull back and finds the same and finds resistance there, and then maybe continue downwards. Okay, so we'll just see the price, or we'll focus on the price action detail when the price gets to these zones. But before it gets there, we are going to be bearish. Okay, okay, so that is for DXY. Okay, so let's go to gold. Let's go to gold and see what gold has for us. I said I'm gonna be very brief, so let's see gold. Just a moment. So that is in the meantime, that is how you do the top-down analysis. Okay, so for gold, let's find gold. Sorry. So this is gold, and I would love to begin with the higher time frame. So let's go to daily on gold. Okay, let's go to daily. So this is the daily chart on gold. We can see gold has been so bullish for a very long time, okay? And so we focus only on the recently printed price. So we just focus on this place, okay? So going to gold, when we look, let me just go back to 1 month time frame just to show you something. I was very positive last week on gold that it was going to come to this fair value gap right here, right there. I was very positive that this price was going to come to this fair value gap, but unfortunately, it didn't get there. Okay, so having that in mind, let's go to the weekly. For the weekly chart, what do we see? We see that the price, we mark the most obvious institutional reference points that we see. So that is a fair value gap, and this is a swing high that was wicked, and the liquidity was grabbed and the price traded below. Okay, so that is on weekly. Let's go to the daily, because the weekly has it doesn't have a lot of information for us. We just have this swing high that the price bounced back off of, and then the price came to this fair value gap, touched the fair value gap multiple times, and you can see that this fair value gap was strong enough because the price didn't go past it. It didn't trade through. It just bounced back. Okay. So let's go to the daily chart. The daily might be possessing a lot of details. Okay. Now on the daily chart, okay. Now let me delete this because the weekly fair value gap can't be the fair value gap in the daily chart. It's not making sense. Okay. So let me delete this. So on the daily chart, we see that this bearish pressure was coming from the liquidity resting at the buy side. Okay, so that was the buy side liquidity. It was wicked, the price came down, traded down, and if at all price was to trade into if at all price was to trade below this zone, of which I know that was the target of most people. If the price was to trade below this zone, we could be targeting points of interest at this left side. Okay, these areas of interest right there, like that fair value gap. Okay, but we can see that the price came just to this point and bounced back. So on the daily chart, there was no change of character, and there was no market structure shift. The market structure shift would have been printed at this point. Okay, so if at all this price was to come down past this swing low, displace down it, and we find the daily candles closing below, then that would be a valid market structure shift for us. But as long as we remain up, okay, as long as we remain above this swing, we are still bullish. Okay, we are still bullish. Now, what do we see on the daily chart? We see that we mark the most obvious points of interest we can see. So for me, I want to say I'm seeing this fair value gap right there. That as the price is just currently trading into. Okay, and we can see again that this is a market structure shift on the daily. Okay, that is a market structure shift. Okay, sorry. So on the daily, that is a market structure shift. Okay, because we were bearish, breaking structures, but it failed to break the structure right here and went back high, displacing above this swing high, and automatically this candle is closing above it. So that is a valid market structure shift. And when the price closes above this zone, okay, and we can see on the left that there is a swing high right there. Okay, there is a swing high right here, right there. Okay, so this is the buy side liquidity again for me. Let me kind of remove the color, just make it visible. Okay, so sorry, the price is currently trading. It is currently at this bearish fair value gap. Okay, so what do we expect? Having this information in mind, for me, what do I think? I'm thinking and I'm expecting that if this gap is strong enough, it will hold the price, okay, or rather, it will really resist this upward movement. And what do you expect? If this gap will resist price, I'm expecting the price to come down, to retrace to this this point of interest. I can see there is a daily fair value gap. There is a daily fair value gap right here. However, it's been traded into, so I don't expect much. I don't expect the price to really come back again. The chances are very minimal that the price will come back to this fair value gap. However, it just touched the tip of it. So if it comes to this fair value gap, we expect the price to bounce off it. So we expect the price to come from that fair value gap to this one and maybe bounce back, and we remain bullish. Okay, but okay, this is just on the daily. The 4-hour time frame might give a different detail. We might find something else just in between here that will support the price. Okay, so let's go to, I want us to go to the 4-hour time frame. Maybe we'll have more details. Okay, so on the 4-hour, this is the 4-hour time frame. We can see that the daily fair value gap is also the 4-hour fair value gap when we just break it down like that. Okay, the 4-hour fair value gap, that is it. So the daily fair value gap is also overlapping with the 4-hour fair value gap. So I'm expecting the price to trade downwards just a little bit after touching into these zones, grabbing liquidity at this buy side and trading into this fair value gap. And I said if this fair value gap is strong enough, it will bring the price down. Okay, but on the 4-hour chart, we can see that the daily fair value gap we printed or we marked previously was traded into on Friday here. So again, chances are very low that the price will get here because there is another fair value gap resting right there. Do you see that? Okay, I'm an ICT trader, and so my trading strategy revolves around these things. Revolves around order blocks, fair value gaps, liquidity voids, swing highs and swing lows, and things of that sort. But considering this, uh, if this zone will resist the price will trade back. The price will trade back from that zone to fill this imbalance and then trade back high. Okay, that is the expectations on gold. And if it trades back high, the most immediate target is the price uh, around 2450.40. So if we remain bullish on gold, that is the most previous point of interest we're going to target. But at least for now, we just expect a retracement, a little pullback, because the price is at a very important institution reference point right there. So we expect a little pullback and then maybe going further upwards. Okay. So again, the price might come to this. We never know. We never know. But we will just be observing the price in detail to see what might happen. But for now, that is the information we have. Okay. So stay tuned, and maybe next week we'll see how it plays out. Hopefully, it goes. The odds will go on our favor. Okay. So thank you for watching this, guys, and this is for educational purposes. Okay, this is for educational purposes, and that is my expectation on gold next week, but I'm still bullish. Okay, so having done this, beginning tomorrow, I wish you a uh, very blessed week for traders. Okay, and thank you for watching, guys, and thank you for really supporting me, and continue supporting and continue watching my videos, continue learning from them. You can share, and I'll be very thankful. So until we meet again, thank you and thank you and thank you again, and subscribe, please.